We're joined by John Wraith, fixed income strategist with Bank of America, Merrill Lynch. Hi, John.
Morning.
The OBR budget forecast, but the growth forecast first. What sort of downgrade might we see?
Well, we suspect that they will indeed move down pretty much in line with the consensus. This year, the forecast is not that controversial, but certainly from next year, the market starts to diverge from what the previous government had outlined. So maybe a cut towards 2.25 for 2011. And then beyond that, we suspect forecasts will be downgraded to a sort of annual rate of about 2.75.
Does that change the thinking from the Bank of England's perspective with regards to monetary policy?
Not really. I mean, I think, the Bank of England have always set monetary policy based on their own view of the economy anyway. That said, their growth forecasts, certainly beyond the near term, have been much more in line with what the previous government was saying. So there is a chance that at the margins this impacts on monetary policy, but of course it'll only be when we actually see how growth evolves that we have an idea about that.
The budget next week is far more important, isn't it, for what the Bank of England's going to do, because you get a feeling that it's just waiting for that. It can't really make any big moves, big decisions on QE either until it knows where the budget cuts are going to fall and how big the cuts are going to be.
Yeah, I mean, the monetary policy can only be set in relation to the fiscal stance, and the bank's always wanted to have an idea of what the new government post the election in May was going to do on the fiscal side before deeming whether monetary policy is at an appropriate level or not. So yes, in light of what we're going to see today and then the budget next week, the Bank of England will have a better idea perhaps of how monetary policy should be set relative to the new fiscal situation.
What's your overall view of the OBR? I mean, it is allegedly an independent body. How important is it that it stays independent?
Very. I mean, I think that's the critical point about it, is that it has to be seen to be independent, because if it isn't, if it's seen in any way as some sort of mouthpiece for the government, we're back where we were before, where growth forecasts, certainly for future years, where they can't be disproved, can be set to be aligned with political incentives. So it has to be seen as independent, both now where perhaps it's an easy option to downgrade growth forecasts given that the last government was a different colour, but in the future as well. And approaching future elections, it clearly could be controversial for an independent body to start revising growth forecasts down, but it'll need to do that if that's its genuine view for it to establish credibility with the market.
You're quite bearish on 10-year yields going forward, aren't they? They haven't had too bad a year so far, have they, in 2010?
They've had a very good year, yeah.
Which would confuse some with all the concerns about the fiscal side of things. Why are you so bearish from here?
Well, I guess the first thing to say is that there's very strong evidence a lot of the money that's come in recently and that has been responsible for the fall in yields has come from overseas investors. The data's there. They've been buying at a rate that is 3 or 4 times higher than is typical, and therefore we think is directly attributable to the situation in the Eurozone and the fallout from there. And when you bear in mind that the Eurozone's problem at its roots is in government debt, then clearly we do have risks ourselves if the situation that we're confronting isn't addressed initially via a process of today's announcements and the budget. So the problems we have at the moment are being masked by flows from danger, if you like, a flight to quality bid for UK debt. But if that bid goes away, then I think the markets will want to see that there is some significant fiscal action being taken. One of the dangers to us now is that this government could go too far too quickly. Yeah. This isn't just a one-way street where you have to do as much as you can immediately. Clearly, growth remains pretty fragile both here and elsewhere. And if they do too much heavy lifting too early, you can easily trigger another
Inflation
recession.
data tomorrow, John, should come down from 3.7, we say, to 3.5, but still well above the 2% level. How tricky is that making the BoE's job?
Very. We've had our eye on this for a while. Inflation consistently surprising to the upside. It is expected widely to fall tomorrow. Should that not happen, or should it even continue to rise, the markets are going to start getting very nervous, because we're supposed to be through the peak in inflation now. It was supposed to be much lower than its current level. And the MPC's remit ultimately is directly and only to target CPI at 2%. So we need to see that come down.
Bigger figure tomorrow. Thanks, John.